Hello guys, Lance Martin, Coldwell Banker Town and Country and the Martin Group, returning for our November 2025 Real Estate Market Snapshot. It is crazy because I was just in studio with Adam a couple of weeks ago. We were way off schedule for October. So anyway, I'm back. I just posted my October snapshot a week ago because I was late. We'll be posting this one today. Today is November 7th. So let's jump right in. A lot of just really interesting stuff, at least as far as I'm concerned. I think it's crazy interesting what's happened in this market just in the last 2 or 3 months. A lot of things that I'm seeing today that I was not expecting to see, and most of it is positive. There's a couple of things in here that still kind of stink a little bit, but on general, I feel a lot better about where we are in the residential real estate market today in Southern California than I maybe did over the summer. So anyway, same QR code that we've been using. So all the slides here, all the slides for the big event that we did a couple of months ago, and frankly, everything that I've pretty much ever done in my life, you can catch on that QR code. I have a save the date. We're trying to get back on track with our annual market forecast. So our 2026 event, we're going to go back to our March. I don't actually have a physical date in there yet. It's going to be in the month of March. However, I'm pretty sure, for those of you that really want to save the date, it's going to be on Wednesday, March 18th. So we'll keep an eye out for that. I'll definitely have that date locked in here within the next couple of weeks. But our 2026 event, we're returning to March, which is basically where we've done it 12 of the last 14 years. It's been in the month of March, and the last 2 years just got a little funky on us. So at any rate, back on schedule. So let's just say March 18th. Give me a little bit of latitude on that. We might move it a week here, a week there. But anyway, we'll be live in person and we'll be back on track. So let's jump right into our Southern California update. We're going to start with median price. One of the reasons I feel a little bit better about this data than I did maybe 2 or 3 months ago is I think the word here is stable. I feel that prices are stable throughout the 4 counties that we tracked. I wasn't expecting maybe stable on November 7th. I was expecting a little bit more volatility. So if you want to go back and just kind of take a look at the arrows over here, the first top arrow is Los Angeles County year over year, which today's November 7th. We're looking at October 31st, month end numbers October. Literally flat. Okay, $999,000 median price in the county of Los Angeles. That's all residential single-family homes in the entire county. It includes everything. And it's zero. It's exact same price it was in October of 2024. You can't get much more stable or flat than that. Orange County's up a little bit, 4.2%. Riverside County is down, but it's down nothing, 0.8%. And San Bernardino County down, but again, 1.5%, or 1.5%. But anyway, nevertheless, those numbers, up 1, down 1, doesn't matter. Up 3, down 3, to me it doesn't matter. This is nice, this is stable, this is flat. This is the exact opposite of what we've been experiencing pricing for the last 3 or 4 years with these ridiculous price increases, 25% increases year over year type stuff. So kind of boring, but in my world, from a pricing standpoint, I love boring. Boring, this is good. I feel comfortable with this. This is what I would have hoped for. Having said that, I wasn't expecting this. If you went back and looked at some of our snapshots that I would have done over the summer, we generally see property values pulling back a little bit this time of the year, and we've seen a little bit of that month over month. But the year over year numbers, again, boring, flat, stable. I love it. That's exactly what I'd like to see. New listings. Okay, new listings are, next slide, you can click into that and go through there. New listings are down year over year. Again, oh, that's horrible. No, I don't think that's horrible at all. Given where we are price-wise, I think the sellers out there are aware that, hey, if I'm not serious about selling my house, maybe I should just calm down here a little bit and let's revisit it in 2026. So even though these are year over year numbers, down 7%, down 14, down 5, down 10, you could look at that and say, oh, that's bad. New listings are down, high single digits or, 15% in Orange County. That's not bad, that's fine. That's fine. We don't need a lot of properties on the market right now, given interest rates and the supply. We have enough, even though, again, there's a supply and demand issue there. But anyway, so these are new listings, just for clarity. These are listings that came on the market in the month of October. So we're comparing brand new listings in October to brand new listings a year ago, and we've got a downward trend. So, okay, that's fine. Now, this is the one that I've really been focused on, and this is the one that was concerning me, that we were going to see all listing inventory stack up and stack up and stack up, where we would have a really out of balance supply and demand issue, meaning more supply than this demand can handle. Well, you know what? Again, that hasn't panned out either. So again, this is about as close to boring and flat and stable as I could have asked for, which that's what I'm asking for, boring, flat, stable. So October to October, all listings on the market. LA County's 0.5% higher, Orange County's down 2.5%, Riverside's down 5.1%, San Bernardino's 1.2% on the positive side. Again, it wouldn't have mattered if any of these numbers had changed by 3 or 4 or even 5 percentage points on either side. I'm like, okay, that's cool. We can live with that. So basically flat. What I was concerned about a few months ago is this inventory was just going to continue to stack and stack and stack. And we would have seen numbers like, oh, we have 10, 15, 20, 25% more homes for sale than we did a year ago. Well, that hasn't been the case. So we basically are pretty much boring and flat. Inventory levels are not ridiculously out of control. Keeping in mind, and I feel like I need to say this, we still don't have enough houses to sell. Given the fact that we have interest rates high and the buyer demand is somewhat weak, that's okay today. You know, when we had 25 offers on one house, that's out of whack. But now we don't have that. Now we have 1 or 2 offers coming in on a property, and it might take 30, 60, 90, 120 days to get those 1 or 2 offers. Not as exciting as it was a little while ago, but frankly more healthy for the real estate market. So these are the inventory numbers for October. All numbered, just to kind of put it in perspective, about 10,500 homes for sale in all of LA County, 3,000 in Orange, 7,200 homes in Riverside County, and 55 in San Bernardino. So I like that. I feel really good about that number. Now, pending sales still suck, but they don't suck like they used to, okay? So again, you can click into the chart. It still shows pending numbers way, way down. I still have my little graphic, record lows continue. I should have put but things have changed a little bit, and they have changed a little bit. So year over year numbers, LA and Orange County are negative, down 4%, down 7%, but Riverside, San Bernardino numbers are higher. So we've sold more homes in Riverside and San Bernardino in the month of October than we did in the month of October 2024, and less, of course, in Orange County. But again, if you go back and look at a few snapshots ago, all of these were negative, and they were all high double digits, 25%, 35%. So now again, comparing October to October, nothing to get too crazy about, because October's not a great month. I mean, we don't normally have high sales volume in October or November or December. So nothing to get excited about on a flat October, or maybe a little bit of improvement from October to October. But hey, I'll take it. I'll take it. At least it's flat, and we're not looking at, again, gigantic double-digit decreases in pending sales. So as much as I've been screaming about how painful it is that we're not selling enough houses, because that's how I pay my bills, well, we're still not selling enough houses, but it appears as though maybe some of that, if bleeding is a good analogy, or when the bleeding has stopped. Okay, so we shall see. But I feel really good about the pending sales numbers, even though they're still down. But for October, I will take it. Again, same chart we've been talking about, all lows in the wrong places. Probably could pull this one off, because maybe this doesn't, although that 100% applies. This is where we have been for the last several years, which is basically this window here. If this was normal, this is where we've been in these low troughs over here. But it feels like maybe we might have turned the corner a little bit, and we're starting to see a little bit more stability. And I think, quite honestly, we've just settled into the interest rates. As much as I've been complaining and crying and bitching about these interest rates and how they're impacting buyers' ability to buy, sellers' ability to find enough buyers, my ability to close enough transactions to pay my bills, I think we've kind of settled in. So the days on market numbers are, again, higher, 20% higher, 26% higher, 41% higher, 29% higher. But again, the numbers aren't crazy. 40 days, 38 days, 55 days in Riverside County. I was talking to one of my friends / clients, so I've got his home listed right now. Okay, we've been on the market for 4 months. We've been on the market for pushing 120 days. He actually watches this. He's probably going to be watching this here when it hits, and he's going to text me and say, hey, yeah, you were talking about me. So his days on market is double, approximately, what we're seeing for the average of Riverside County. So we have to talk about that. Well, what does that mean? If you are a seller in today's market, the old days it used to be, it's location, location, location. You'd hear about that all the time. And when I say the old days, I've been doing this 38 years, and when I got into the business, it's location, location, location. Well, I very quickly learned that it's not location, location, location. It's location, condition, and price. Not a damn thing you can do about location. If my house is in Riverside or Long Beach or wherever it is, it's in that location. I can control condition and I can control price. So if your condition is awesome and your location is what it is, okay, well, that's all you got is price. If your location is where it is, but your condition isn't so awesome, well, you got to adjust down on price even more so, or you got to spend some money to get your condition level up. So those are the type of conversations I'm having with those type of sellers who have been on the market for, let's just say, more than 55 days. What can we control? We can control condition, we can control price. So maybe we have to do some paint, maybe we have to do some carpet, or maybe we have to do some price reductions. But these days on markets, less than 2 months for all 4 counties, nothing to get excited about there. The month supply is kind of sort of the same thing, almost 4 months, 3 months, 4 months, almost 5 months. It's a little bit higher, but again, this is more normal, whatever normal is a decade ago, 15 years ago, 20 years ago. Certainly it's not been normal for the last 3 or 4 or 5 years, or at least the last, I'll say 4 or 5 years. But again, nothing crazy about a 2 to 5 month supply of inventory on a monthly basis on the market. So again, I kind of feel pretty good about that. I left the slides up, just thought I'd just hit them very, very quickly. This is from Jordan Levine. He's the chief economist at California Association of Realtors. I took a couple slides out that was in last month's presentation, but as I was going through this, I just thought I'd kind of hit these points again. Single family home, pending sales, still very, very low. They're forecasting 270,000 units sold next year. Feels about right. Basically, what Jordan is saying is that number of homes sold in 2026 will be about the same as what's being sold in 2025. Not great numbers, but it feels right to me. This is just pointing out that the first-time buyers are, they're priced out. I mean, just first-time buyers, lowest level in 6 years. Okay. Feels even lower than that, but interest rates are high, first-time buyers are getting squeezed, which is always a thing. A lot of cash buyers, highest in 13 years. I think that's probably still true. By the way, it's probably still true. This data is 2 months old. Sellers housing, tenure, people staying in their houses a lot longer. So this is all still true. Same stuff that we had before, and this is just CAR's forecast. I did go ahead and I want to just emphasize, they are forecasting a 6% interest rate at the end of the year. I'm no longer even close to that. We'll talk about where we are here in about 2 minutes. But anywhere between 6 and 7% for 2026 just feels right to me. 6.5. I still have my slide up from Wells Fargo that says that's where we are. So again, if you want Jordan's slides, his entire deck is on the QR code. So the entire deck that Jordan has. I'm skipping my spotlight this month. I just didn't have time to pull it in. So on the interest rates, since we spoke last, Fed funds rate was discounted another 1/4 point. For a brief second, we saw an improvement on interest rates, and then we saw interest rates shoot back up. Again, today's November 7th. This was as of an hour ago. The average 30-year fix, if you take all the programs and you throw them into a bucket, they average out at 6.32. Can you get a better rate? Yes. Wait a minute, Lance, I just got quoted a higher rate. Why is that? Call me. It's probably you. It's probably your down payment or your credit or some issue. You're going to get a higher rate. So just use that as a guideline. 10-year bond is a little over 4. We did ever so briefly creep back below 4%. I think a week ago it was 3.9 something or other. So I don't know, this is where we are. So if we continue to stay at this rate, or if we stay at what Wells Fargo forecast a year ago, 6.5% for 2025 and 2026, this still feels right, which is why I keep the Wells Fargo slide up on my deck. So we shall see. So that's where we are with rates. I don't know that we've unfrozen a little bit. The market still feels frozen, but I think we were just used to it. I think the consumers are now used to it. And it's like, okay, I'm tired of waiting for interest rates to get lower. If I can afford it, I'm going to buy. So maybe I'll update this chart and get rid of it here in a little while and just kind of, it's our new normal. So this is kind of my forecast. I've kind of updated this and changed this. So earlier in the year, prices are going to be up. Nope, I don't know if you can see that on the slide. The red text might not be showing very well. No, going to be flat. We're flat. I mean, heck, we're only 2 months away from the end of the year. We're going to be flat. Basically, no big dramatic changes. Inventory, there was a prediction of inventory being up by everybody, myself included, earlier in the year. Nope, it's going to be up, but just nothing. It's basically, again, flat. A lot of us were predicting sales volume increases in 2025, myself included, partially because the sales volume was so shitty last year in 2024. It's like, well, of course we're going to sell more homes because 2024 was so bad. Nope, 100% miss. I mean, we're not going to be up. We're going to basically be flat to down. So, but certainly not. This was a very confident sales volume up. If you went back and looked at my snapshot, or you looked at most of the people that are forecasting what the volume was going to be at the beginning of 2025, well, everybody missed it. Everybody missed it, and it's flat to down. And again, mortgage rates are still pretty much where they are, and I think mortgage rates are going to be the boring story here for the next at least 12 months or so. So at any rate, so that's where we are. Still watching vacant listings, price reductions, and buyers that are stalking Zillow. I was on the MLS yesterday with a brand new agent in our Covina office, just kind of randomly going through, and I stumbled upon this vacant listings. It just, every time I go through and I just start looking at listings, I'm like, wow, I'm so surprised how many houses that are on the market right now are vacant. It just I don't have anything, concrete to sit back and compare it to right now. I probably should do a further analysis of that, but I just find it to be interesting, something I'm really keeping an eye on. And then of course the price reductions and, those buyers in escrow that are like, hey, did I just find another house that I like better than the one I'm supposed to close escrow on in 2 weeks? So just again, a reminder, we're gonna get together in March, which is just gonna be here like that. March of 2026 for our forecast, speakers and locations to be determined. And I think that brings us to the end. It does. So thank you for your attention. Hope you have a great Thanksgiving. We will do a snapshot in December, so we'll be back on track. So have a great Thanksgiving holiday, and we'll see you the first week of December.